AI and chip stocks are selling off hard, and chip stocks are now officially in a bear market, down 20% from their recent highs. And today's news from China didn't help the situation. A company from China, Moonshot AI, announced their new open source model, Kimi 3, that's a lot cheaper than Anthropic's Claude and OpenAI's ChatGPT models. And if it's a lot cheaper, it goes into question, what are we doing with all this investment in the United States with data centers? And that's why the market is selling off hard today for chip stocks, at least as of this morning. Obviously, we'll see how the market closes, but I think the market's getting a little bit ahead of their skis. This is like DeepSeek 2.0 again, with DeepSeek last year announcing a cheaper model early last year, and the market went off on a big sell off because of that. But I think that even with cheaper models, that increases AI investment because more companies can afford all kinds of workflows, projects, and use cases, and hiring more people. There's more things they could implement AI on if the costs and the compute costs are cheaper. So, if anything, I think that's an ultimate good thing for AI. But it is causing a sell off today. But ultimately, we had good economic news this week. I made an inflation video the other day that CPI inflation down 0.4% month over month. That's the biggest drop over 6 years since COVID times. And then PPI fell negative 0.3% month over month, the biggest drop in over a year. That's good signs on the inflation side, mostly because of geopolitical tensions, at least last month in June getting better, but now they're escalating again. So who knows if that June inflation report will hold for July? Obviously, we'll see. But at least the market isn't dialing, rate hike as like the base case anymore. Rate hike expectations went down, so that's some good news. But overall, yeah, we have to. But if yields are going down, and if oil prices continue to go down and inflation goes down, that's cheaper energy. And that means data center investment from these big tech companies will be cheaper. That'll promote that. And if yields go down, a cheaper cost of capital, there could be more financing for these data centers so that these tech companies could really, do all these upgrades for the grid ultimately. But, Ed Yardeni says we're in fabulous earnings momentum. These companies are making money. That's even more so. The earnings growth is even more than the stock price. This is unlike the dot-com boom. This is a fourth industrial revolution. And Tom Lee agrees with it. He thinks we could hit 8,000 in the S&P 500 possibly this year in one of the best market cycles in our lifetime.